Greetings, everybody. Welcome to Liberty Call. Today is Friday, September 8th, 2023. Hope everybody's having a fantastical day out there. Who's ready for the weekend? I know I am. Looks like the markets, or the three major indexes, managed to make it back into the green. They'd been back and forth into the red most of the day. Looks like Europe, it looks like it finished mostly in the green and then a lot of red in the overnights. So, anyways, if it's your first time watching Liberty Call, I'm glad you're here. Thank you very much. We're going to cover what happened in the markets this week, the economic data that came out, market recap, and then an article on consumer credit. So should be some really exciting stuff. Now, if it is your first time, if you could do me a favor, you right there in the purple shirt, give me some thumbs up, likes, shares, subscribes, follows, press the notification bell so you know when I go live. And let's go ahead and get into the numbers for today. Dow Jones was up 0.22%, 75 points, closed at 34,576. The S&P 500 was up 0.17%, closed at 4458. NASDAQ up 0.09%, closed at 13,761. VIX fell 3.82% today. It's currently holding at 1385. Canada was down 0.29. Brazil was down 0.74. And Mexico up 0.8. All right, over in Western Europe, Germany was up 0.14%. The UK was up 0.49%. France was up 0.62%. Netherlands down 0.08%. Spain up 0.59%. Italy up 0.28%. Switzerland down 0.41%. And Portugal up 1.08%. In Russia, both exchanges were red today. The MOEX down 0.83%. The RTSI down 0.16%. And the overnights, the Nikkei in Japan was down 1.21%. Australia was down 0.2%. New Zealand down 0.63%. In China, the Shanghai was down 0.18%. The Shenzhen component down 0.38%. China A50 down 0.7%. DJ Shanghai down 0.16%. And looks like the Hang Seng and the Taiwan weighted were closed. All right. So, like I said, kind of a mixed day globally, but, not really shocking at this point. All right, let's go ahead and take a look and see how the markets did for the week. Starting out with the Dow Jones, looks like it's going to finish the week off down about 0.58%. The S&P 500 is going to finish off the week down 0.98%. The NASDAQ Composite, it's going to finish off down about 1.71%. The Dow Transports, down 3.6%. And the Dow Utilities, wow, the lone bright spot up 0.69%. Everything else was down. So let's go ahead and zoom out. Here is the Dow Jones and take a look and see how things are trending right now. Right here is the beginning of last year, at the beginning of 22. We can see the downtrend, had lined up, broke the downtrend in the fourth quarter of last year, traded sideways for most of this year. And then we did have a bit of a rally back in the beginning of the third quarter, but that looks like it's lost a lot of steam. And if we zoom in right here, you can see where we've been trending down. So I'd say in the next week or so, we'll be able to tell whether or not, this downtrend is going to have some legs to it, or if it's just more the same, more sideways action. And same thing over here with the S&P 500. Beginning of last year was in this downtrend, broke the downtrend in January, was sideways for a while, was up. We did have a nice uptrend, I think, on the hopes that the Fed was going to cease their rate increases. But again, we can kind of see it did break through. But again, looks like it is still lining up and following this trend. So again, we should know probably, by about 13th, probably by the end of next week, whether or not this is going to be a longer term trend, or if it's something we should ignore and look for something longer term. All right. Well, that's everything there. Let's go ahead and get into the economic data that was put out this week by the powers that be. Starting out with initial jobless claims, it came in at 216,000. Forecast was 234. Last week's number was 229. Continuing jobless claims came down to 1.679 million. Forecast was 1.715. Last week's number was 1.719 million. So a nice little improvement there. Factory orders month over month contracted at a negative 2.1%. The forecast was 2.5%, so better than forecast. And last month's number was a positive 2.3%. The ISM Non-Manufacturing Purchasing Managers Index came in at a 54.5. The forecast was 52.5, so a little better than forecast there. And lastly, consumer credit came in at 10.4 billion. The forecast was 16 billion, and the previous number was 14.02 billion. So, all right. So that is, like I said, on what was it, Tuesday, Wednesday? I forget which. Probably Tuesday when I went through it. It was a light week on data, probably due to the holiday and everything else going on. All right, let's get to the market recap for today. S&P 500 gives up gains as Fed fears persist. All righty, get to my notes here. There we are. On Friday, the S&P 500 showed little change, but remained on track to end the week with losses driven by concerns that the Federal Reserve might maintain higher interest rates for an extended period, which dampened market sentiment. Shocking. I know I've been saying that for a while. Energy stocks led the market higher, rising over 1% as oil prices continued to benefit from recent supply cut extensions by major oil-producing nations like Saudi Arabia and Russia. ANZ Research noted that these supply cuts are likely to accelerate inventory drawdowns into the end of the year. Phillips 66, Marathon Oil, and Valero Corporation were among the top gainers in the energy sector, with Valero Energy up more than 4%. In the technology sector, Apple Inc. shrugged off concerns about weakening demand in China, even as reports suggested that China expanded its ban on iPhones to include local government workers and state-owned companies. Some on Wall Street viewed the sell-off in Apple as an overreaction, noting that the government agency iPhone bans would have limited impact since they make up a small portion of the iPhones sold in China. Grocery retailer Kroger Company reported second quarter earnings that exceeded Wall Street estimates, although revenue fell short to slowing grocery prices. Kroger also announced its plans to settle opioid claims by paying over $1 billion and selling 413 stores and assets to C&S Wholesale Grocers in a $1.9 billion deal to address antitrust concerns related to its merger with Albertsons. DocuSign Inc. reported quarterly results that beat estimates, but the company expressed concerns about the macroeconomic pressures that could impact future growth. This cautious outlook caused its shares to fall by more than 2%. CEO Alan Thigesen noted that while they were pleased with the results, ongoing macro pressures were tempering their expansion rates. Satellite imaging company Planet Labs PBC saw its shares decline by over 12% after it lowered its annual revenue guidance and reported a wider than expected loss, reflecting challenges in its business environment. Oh, well, not good. All righty. Last up, we got an article here from the Mises Wire titled "Consumer Credit is Expanding Even While the Fed Pushes Up Interest Rates," written by Kevin Vanelswick. And he's got two quotes here. The first one: "To me, a wise and humane policy is occasionally to let the inflation rise even when inflation is running above target." Janet Yellen. And then the next one here: "We have sighted the enemy, and he is us." Pogo. All right. Let's get to my notes here. All right. The Federal Reserve's decision to raise interest rates in July of 23 has started to impact the average American's credit card interest rates. When the Fed increased interest rates, the annual APR used to calculate credit card interest typically rises by the same amount. As a result, most credit card holders will likely notice higher interest rate charges on their September statements. The underlying interest rate for credit cards is closely tied to the U.S. prime rate. From March of 22 to July of 23, the prime rate increased from 3.5% to 8.5%. Banks determine the floating APR for credit cards by factoring in various components, including processing costs, borrowing expenses, risk premiums for potential defaults, and individual credit scores. On average, an American holds 3.8 credit cards, and credit cards are used for 21% of all payments nationwide. Moreover, 76% of cards are active, with 40% carrying a balance and accruing interest. As of late 2022, the average U.S. credit card holder credit card debt amounting to $6,270, and Generation X had the highest average credit card debt per person at $8,134. Way to go, Gen X. Good job, guys. You know, us middle-aged people. Pay off your bills, dude. The credit card market has been deteriorating, with a quarter of respondents in the June 2023 Credit Access Survey seeking additional credit. Over 20% of new credit card applications were rejected, and more than 30% of credit limit increases requests were turned down, especially for those with credit scores of 680 or lower. Yeah, if your credit score is below 700, you don't have good credit. Inflation has led to increased credit card usage, with some individuals even using credit for grocery purchases. Credit card debt in the first quarter of 2023 approached $1 trillion. Banks are preparing for a potential recession by setting aside funds for future loan losses. Capital One and American Express have already increased their contingency funds, while other U.S. banks have allocated $7.6 billion ahead of their second quarter 2023 earnings reports. This cautious approach is a response to the economic uncertainties. Consumer optimism, particularly regarding inflation expectations, has declined, suggesting concerns about the future economy. While government spending persists, the inflation remains a key driver, and the cost of credit is rising as real wages decrease. This challenging economic environment poses a significant burden on the average American, who is increasingly relying on credit for various expenses. Yeah. My advice to you guys, having spent nearly a decade in credit and collections, is that get that stuff paid off now. Because if we go through some sort of major downturn, you're going to want to have a nice, cash reserve, nest egg set aside, and you're not going to have to worry about, robbing Peter to pay Paul. So, all right. Well, that's everything I had for the week. If anyone needs anything from me, please go to dsafinancialgroup.com. All my information is right here. You can send me an email to r.dahlman@dsafinancialgroup.com. And hope everyone has a fantastical weekend. Let's hope the Stros play well against the lowly Padres, as opposed to last weekend where they got swept by the Yankees. It was just terrible. Anyways, all right. Like I said, hope everyone has a fantastic weekend, and I'll talk to you next time. Adios.